Well, we're going to go ahead and get started. Welcome, everyone. Welcome to our webinar on withholding basics. I'm Cindy Nellis, and I'm the director here at Penn West Clarion Small Business Development Center. Whether you're ready to hire your first employee, you have employees, or you're looking to pay someone to perform services for your business, today's training will help you navigate withholding basics from W-2 income to 1099s. You will learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. Additionally, today we will touch on withholding for retirement income and PA rules for different types of retirement withdrawals. But first, we'd like to thank the Pennsylvania Department of Revenue. We have a team of experts today. The Department of Revenue is partnering with us to present today's webinar along with our full lineup of tax series. So this is our tax series plans for 2026. And if you haven't joined us for the other three modules, we will get started in January with running through the series again, and we encourage you to join us. After today's webinar, we will be sending you all the slides that you see, as well as the recording and some additional handouts and resources as we identify them today. So, a couple of housekeeping rules. All participants have been muted and your video has been disabled. So if you have a question for our presenter, we would just ask that you use the Q&A. As I mentioned, we have a team of experts from the Department of Revenue, and they will be answering the Q&A questions as Rachel, our presenter, is running through her presentation. If you have a question for me, your host, throw that in the chat. And if we do some interactive question and answer, we'll use the chat to do that as well. First, I'd like to quickly introduce you to the Small Business Development Center. We are a grant-funded program with a mission to help businesses start, grow, and prosper. We primarily provide one-on-one business consulting services that are at no cost, and we pledge our confidentiality to you. We do, though, spend a time presenting training, seminars, webinars, and on demand. And our training seminars typically are either no cost or low cost. So I will be sending you a link to our statewide website where you can actually take a look at all the different training events that are being offered by all of the SBDCs in Pennsylvania. And of course, connecting with the SBDC for assistance does allow you access to many tools and resources that we have. So I encourage you as a business owner or someone looking to start a business to become a client of the SBDC. Again, connecting with us doesn't cost anything. We're just here to help you start and grow your business. We also partner with a lot of other economic development programs. And so if we don't have the resources or the answers that you need, we definitely have people that we can reach out to, organizations that we can reach out to get your questions answered. Just real quick, the Small Business Development Center Network in Pennsylvania, because we are a national program. In Pennsylvania, we are made up of 15 centers, all located at institutions of higher education. So take a look at your county and the SBDC that covers you. There is no wrong door, so you can always connect with me, and I will get you connected with the SBDC that covers your county. And with that, here is my website, our statewide website, my center email, and my phone number, my center's phone number. So feel free to get in contact with us at any point in time. So I'd like to welcome our speaker, Rachel Washington, and she is the Administrative Officer for the Customer Outreach Relations and Engagement Division for the Pennsylvania Department of Revenue. So Rachel, thank you for being with us, as well as your team of experts. I will hand it over to you.
Thank you so much, Cindy. Let me go ahead and share my screen then. Alrighty, please let me know when you guys can see it.
Yep, it looks great.
Awesome. All right, so I'm going to go ahead and get started. So, hi everyone. My name is Rachel Washington, and welcome to Withholding Basics. I am an administrative officer here at the Pennsylvania Department of Revenue. And just a little bit about me before we begin. I have been working with the Department of Revenue since I graduated from Temple University in 2022. And within our customer outreach relations and engagement, or core division, I help make our instructional Revenue 411 videos, and I am very happy to share some withholding basics with you all today. So let's get started. So today, we're going to cover a wide range of information relating to withholding tax and the nuances that go into it. We will start with some fundamental information about Pennsylvania withholding, and then move into the different types of withholding accounts we have here in PA. So then, once you understand what you need to do as a business owner, we will then talk about how to register for a withholding account. We'll also talk through filing and paying requirements. And then after all of that, we will be covering some things you should know about record keeping. So most new business owners don't realize it is really important to keep good books and records. But please understand that this is for your benefit. If you ever get audited, which by the way is a standard business practice, you want to be able to show that you have done what is necessary to remain in compliance with the Commonwealth. And then finally, we will wrap up today's presentation by reviewing some resources that are out there to help you find answers should you have any additional questions after today. So let's get started with the fundamentals. Now, before we get started, let's define a few key terms that you are going to hear throughout this presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. This would actually include most of you guys. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. All right, so the next term here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. Which then brings us to non-employee. So a non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as a non-employee. As a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit income tax payments. So the next term here is withholding. Obviously, this entire presentation is about withholding, but it is important to note that we are talking about the money that an employer deducts from an employee's gross compensation and pays directly to the government. Then we have compensation. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. Employer withholding is due on all types of taxable compensation, and it is not required on non-taxable compensation. A common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, any damages, whether by suit or otherwise, for personal inquiries or sickness and payments made under workers' compensation acts, occupational disease acts, or similar legislation for injuries received while working are not included in compensation. So next we have benefits. Benefits are any form of perks or compensation that are not provided to employees in addition to their base salaries and wages. These are provided to employees in addition to their base salary and wages. Some of these benefits are required by law, while others are optional. So employee benefit programs, such as pensions, profit sharing, stock bonus plans, and simplified employee plans, otherwise known as SEPs, these are established by employers to provide additional compensation to participating employees upon or after separation from service, or the completion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to employees or their beneficiaries, such as child care facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, or SUB, tuition reductions, disability benefits, strike benefits, and dismissal pay. And so, with that, we're going to take a brief second to pause and see what you guys remember. Take a second, read the question, and put your answer in the chat. Okay, see some people are saying D. Anyone else want to put their answer in the chat? Okay, I'll give you guys just a couple more seconds here to put in your answer, just to see what you guys say. All right. So, you guys are correct. The correct answer is D. PA compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. As employers, it's important for you guys to know what is considered employee compensation and what is not. So keep this in mind as we continue. All right. Non-cash benefits, which are reportable as compensation under Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are not subject to withholding. Payments made by the employer to help employees with additional medical or dental expenses are not covered by medical insurance is taxable. Payments made to workout facilities, gyms, life insurance payments, as long as they are not group life insurance, are taxable. So are non-related educational assistance, pension plans, 401k plans, or other retirement plans. Benefits not included in employee compensation that are not taxable, non-taxable. In general, payments made by employers for employee welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Further, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. So the personal use of an employer's property, whether it's leased or owned, or a service provided by the employer is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided, not reimbursed by the employer. So, withholding taxes vary by state and local tax jurisdictions. Most states operate like the federal government and have tax brackets, meaning the percent of the tax taken depends on their income level. However, Pennsylvania is different. We have a flat tax rate of 3.07%. If you're going to remember anything from this presentation, please remember this tax rate, and I'll say it one more time. We have a flat tax rate of 3.07%. This means, regardless of how much you make, everyone is taxed at the same rate in Pennsylvania for withholding taxes. The amount of tax withheld is a credit against the income taxes that the employee must pay during the year. For PA income tax withholding purposes, there are 3 different types of withholding we are going to talk about, all of which can be filed on MyPath. The most common is employer withholding. Next is other income withholding, and last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, some miscellaneous sources of income may subject you to withholding and retirement distributions as well. An employer withholding account is necessary when you are issuing your employees W-2s. So for other income withholding accounts, which is used when the employee is issued a 1099 NEC, you will only create an other income withholding account if you choose to withhold taxes for PA on those 1099 NECs. And then finally, as a retirement withholding account, this is used when the employee is issued a 1099-R. We're going to cover that significantly more later in this presentation. So, if you are a business owner hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing the services are employees or non-employees before you will be able to decide what type of withholding accounts that you need. So, in determining whether the person providing service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So, the common law rules. These are facts that provide evidence of the degree of control and independence that fall into 3 different categories. So, the first one is behavioral. Does the company have control or have the right to control what the worker does and how the worker does his or her job? Next is financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, who provides tools, supplies, things like that. And then third is the type of relationship. Are there written contracts or employee type benefits, such as a pension plan, insurance, vacation pay? Will the relationship continue, and is the work performed by a key aspect of the business? So, businesses must weigh all these factors when determining whether a worker is an employee or a non-employee. Some factors may indicate that the worker is an employee, while others indicate that the worker is an independent contractor or non-employee. There really is no magic or set number of factors that truly makes the worker an employee or an independent contractor. And honestly, no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. So the key here is to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, you should document each of these factors used in coming up with this determination. So, after all of that, if it is still unclear whether a worker is an employee or an independent contractor, after reviewing these 3 categories of evidence, then Form SS8, Determination of Worker Status for Purposes of Federal Employment Taxes and Income Tax Withholding, can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will review the facts and circumstances and officially determine the worker's status. You need to be aware that it can take at least 6 months to get a determination from the IRS. A business that continually hires the same types of workers to perform particular services may want to consider filing the Form SS-8. All right. Reporting compensation. So, additionally, you need to know if you have employees or non-employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a W-2 and file in duplicate with the PA Department of Revenue. If you hire non-employees, you will need to issue a 1099 NEC. And if you pay via miscellaneous sources of income, you will need to issue a 1099 miscellaneous. So in addition, your employee may receive a 1099-R if they took a distribution from retirement, but that will likely be issued from the financial institution that is administering their retirement or pension plan. So it's important to note that these forms need to be filed in duplicate with the IRS and the Pennsylvania Department of Revenue, regardless of whether there is actual withholding, so long as you have paid more than $600. So once you have determined that you have employees, you need to withhold income tax from their compensation using a W-2, thus requiring an employer withholding account. We will be going over each type of withholding account within the next couple of slides here. So, Pennsylvania law requires employers, like many of you, to withhold Pennsylvania personal income tax from employees' compensation in two common cases: when resident employees perform services within or outside Pennsylvania, and when non-resident employees perform services within Pennsylvania. In simpler terms, if you are a business located in PA or conducting business in PA, you should withhold income tax on all compensation paid to PA residents, but you are only required to withhold on PA source income for non-residents. So, if the employee doing the work does not live in Pennsylvania, but the work is being performed in Pennsylvania, there is a withholding requirement. Whereas if the employee does not live in Pennsylvania and the work is not being performed in Pennsylvania, there is no withholding requirement. So once again, the Pennsylvania personal income tax rate is 3.07%. This means you must withhold 3.07% of the gross compensation that you are paying your employee. We encourage you to deposit this into a separate bank account until you are ready to remit payment to the Department of Revenue. So, reciprocal states. The only exception to this is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. Those states are considered reciprocal states, meaning that if their employees live in one of these states, employers will only withhold the taxes for that state. So even though it may be deemed PA-sourced income, because the work is being performed in our state, we have agreed not to tax them based on their residency in one of these reciprocal states. In these cases, the business is not required to withhold Pennsylvania income tax on the PA-sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must remit an REV-419, or the Rev 419, as I like to call it, to you, their employer, to indicate they live in a reciprocal state. You must keep the completed form in their payroll records for at least 4 years in case of a withholding audit. If a business mistakenly withheld PA income tax for a resident of a reciprocal state, The employee will need to file a PA-40 Pennsylvania personal income tax return to request a refund. So, a great example of this would be if your company is located near the border of Pennsylvania and Ohio. If you hire an employee who lives in Ohio but commutes to Pennsylvania to work, you do not have to withhold Pennsylvania taxes for your employee because Ohio is a reciprocal state and you should instead withhold for Ohio. If you have determined that you are hiring independent contractors or non-employees to perform services and withhold their taxes, you will be required to open an other income withholding account. You will see on the slide that you are required to open an other income withholding account when you hire non-employees that do not reside in PA to perform services worth over $5,000 for the year. Per IRS rules, the 1099 NEC non-employee compensation must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, Pennsylvania rules state that non-resident withholding does not kick in until $5,000 of income is paid to an individual or business. So what is unique about other income withholding is that it only applies to non-resident, non-employees to whom you pay over $5,000 annually. This means if you hire a non-resident contractor or non-employee who lives in PA, you do not have a withholding requirement. In these situations, you will still need to file the 1099 NEC to report the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income. Another reason you may have to open an other income withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are reported on the 1099 miscellaneous. So, withholding on a 1099 NEC. A business is required to file the Form 1099 NEC and withhold PA personal income tax if all the following four conditions are met. Non-employee does not live in PA. Payment was made to an individual, estate, trust, or disregarded entity owned by an individual, estate, or trust. Payment for services was made in the conduct of your trade or business, and payments equaled more than $5,000 for the entire year. So then, on the other hand, the withholding of PA personal income tax is optional if the payments did not total $5,000 for the year, the non-employee lives in Pennsylvania. Please note that withholding is not required for residents that are not employees. And then payment was made to a partnership, corporation, or multi-member LLC. Those entities actually have their own non-resident withholding requirements, but we're not going to get into that at this time. And then finally, if the payment was for services not related to your business. So please keep in mind that the payments we are referring to here is anything that falls under the compensation class of income or business class of income. So we also mentioned miscellaneous income. I'm going to list some examples of miscellaneous income. These are royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate. Payments made to an attorney or any fishing boat proceeds. So, for Pennsylvania purposes, you're required to withhold PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in Pennsylvania, the business should withhold personal income tax at a rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. If you are renting from something like a property management partnership, you do not have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. Please be sure to follow the IRS rules for issuing the 1099 miscellaneous. And finally, the last withholding account is retirement withholding. As a small business, you guys will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, for general information, the Form 1099-R must be filed for each person who made a designated distribution in excess of $10 or more from profit sharing or retirement plans, any individual retirement arrangements, which are IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, charitable gift annuities, and things like that. All right, we're going to take a little break again for a little KBA, as I like to call them. Which type of withholding issues a 1099 NEC income statement? Please go ahead and put your answers in the chat or in the Q&A portion. I'm curious to see what you guys say. And I'm going to give you guys a couple more minutes. Okay, someone says employer withholding for a 1099 NEC. Okay, we have someone saying D and another person saying B. I'm going to give you guys just a couple more seconds here. Okay. All right, guys. So the actual answer is other withholding. And please make sure you remember this. The 1099 NEC, non-employee compensation, is for non-employees or independent contractors. So if you hire an independent contractor, you're going to be filing the 1099 NEC. The 1099 NEC, non-employee compensation, must be filed for each person that is not an employee of your business if your business paid them at least $600 during the year according to the IRS. However, PA rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. Remember, other income withholding only applies to non-resident non-employees to whom you pay over $5,000 annually. So, once you have determined what kind of withholding accounts you need, you would then have to register for them on MyPath. So let's go over how to register. Registering for business tax accounts is going to vary slightly depending upon whether you are an existing entity in PA or a brand new entity. Brand new entities who do not have any existing tax accounts with the PA Department of Revenue will complete the PA online business registration from the MyPath homepage. To get started, you will type in mypath.pa.gov and scroll down to the panel titled Registration. From there, you will click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is intuitive, and depending on how you answer the questions, it will determine what questions you are presented with. Once that is complete, you will immediately receive a confirmation number which you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. If you need help setting up your MyPath profile, please see our Revenue 411 video on creating a primary user profile. Now, if you are an existing entity, say you already have a sales tax account and now you want to add employer withholding, you would need to create your MyPath profile, or if you already have one, log into your MyPath profile and click on the More tab at the top of the screen. From there, you will find a hyperlink that says Register New Business Tax Accounts. This is very similar to the one on the homepage, but some of the information will be pre-populated for you since you already have existing accounts. Please keep in mind that most of the time, sole proprietors will have what we call existing accounts because their personal income tax accounts are linked to their Social Security number. If you are attempting to register from the homepage and you are getting an error message, this is likely the problem. Registering online establishes business tax accounts with the Pennsylvania Department of Revenue, and as well, it opens unemployment compensation accounts administered by the Pennsylvania Department of Labor and Industry. However, all filing and payments for unemployment compensation withholding must be done through the Department of Labor and Industry. So once you are completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner that's required to deduct and withhold tax must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this: online or by using a third-party vendor. Guys, we strongly encourage you to use our online MyPath portal to file and pay your withholding tax amounts. Not only are you able to file and pay for the current year, but you're also able to view previously filed returns, access notices that have been issued from both MyPath and the old eTide system, request statements of accounts that are available immediately, send messages to the department, and more. Another very important feature is that you can actually grant permission to others, say like your bookkeeper, to also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. However, please note that you must create a user profile to utilize this service. And then again, if you need assistance with creating a user profile, please see our Revenue 411 video on creating a primary user profile. If you need help filing your withholding return, you can also watch our Revenue 411 video on filing a quarterly W-3. Lastly, the department does have approved third-party vendors who will provide e-filing software for customers who do not wish to use the MyPath portal. A list of approved software vendors is available on the department's website at revenue.pa.gov. All right, so whereas the filing frequency for withholding taxes is always quarterly, the payment frequency actually may vary depending on the amount of withholding that you are collecting each quarter. When you initially register for a withholding account, your payment frequency will automatically be set to quarterly. However, near the end of every year, the Department of Revenue reviews the average of the current year first and second quarter withholding payments, as well as the prior year third and fourth withholding quarter payments to determine if the filing frequency needs to be adjusted. So, if your total withholding is under $300 per quarter, you would have a quarterly payment frequency. In this case, the taxes are due the last day of April, July, October, and January. If your total withholding is $300 to $999 per quarter, you would have a monthly payment frequency. For these employers, the taxes are due the 15th day of the following month. If your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. And lastly, if your total withholding is $5,000 or greater per quarter, $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose paydays fall on a Wednesday, Thursday, or Friday, and on the Friday following the pay dates for employers whose paydays fall on Saturday, Sunday, Monday, or Tuesday. All right. So I know there's a lot of dates and a lot of amounts to remember. Thankfully, the department publishes a schedule every year, which is called the REV 1716. I call it the Rev 1716. This breaks down filing and payment due dates by filing frequency. And just so you're aware, customers may request a payment frequency change if they so desire. A change to a more frequent payment schedule must be requested 15 days prior to the beginning of any quarter. You may request a frequency change through the MyPath portal by logging into your profile and selecting the frequency change hyperlink, or by using the send a message feature to submit a written request. An employer may change to a less frequent payment schedule only at the beginning of a calendar year, so long as the amount required to be deducted and withheld for each quarter is reasonably expected to be less than the criteria amount for the current payment schedule. So, similar to filing returns, employers can remit their withholding payments one of two ways. Our recommended way is online via mypath.pa.gov, or you can use a third-party vendor. Some important things to remember. Payment vouchers are only available via MyPath, and the use of other tax forms could result in non-filer notification and/or the misapplication of the tax payment. Per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $500. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So, if every quarter you go and you send in a check for over $1,000, you're going to get hit with an EFT penalty every quarter. And if you need assistance remitting your payment via our MyPath portal, please see the Revenue 411 video titled Making Period Deposit Payments. In addition to remitting quarterly returns and payments, employers must also file an end-of-the-year annual reconciliation, Rev 1667. This annual reconciliation not only reconciles all 4 quarterly returns that were remitted, but also reconciles any W-2s or 1099s reported by the employer. Okay, you guys must do this for each withholding account you have. And if you need help, you can definitely watch our Revenue 411 video, which is titled Filing a Rev 1667. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the Rev 1667, which then actually flags the account for non-compliance. When filing a 1099 miscellaneous or a 1099 NEC, ensure that you only enter information for the amounts on which you withheld Pennsylvania state taxes. If no taxes were withheld, leave those fields blank. Please allow up to 48 hours for the W-3 deposit period payments and income statements, W-2 wage records, 1099-R distribution records, and 1099 miscellaneous and 1099 NECs, things like that, to automatically populate on your return. If the pre-populated figures do not match your records, you may manually adjust the return figures or allow enough time for the payments and income statements to process, which is about 48 hours. When manually adjusting the total compensation and the total tax withheld, you must include the number of income records that will be provided to support these totals on the records filed but not yet processed by the department field. Figures for each quarterly period, the amounts of wages or distributions paid, and tax withheld in Part 2 are pre-populated based on the information previously provided to the department. These fields may also be manually updated if quarterly returns have not been previously filed and or processed. The Pennsylvania Department of Revenue is reminding customers that employee W-2 wage records and 1099s must be submitted annually to Pennsylvania by January 31st following the tax year being reported. This includes 1099-Rs, 1099 miscellaneous, 1099 NEC, and annual withholding reconciliation statements, which are the Rev 1667s I mentioned. Customers who file 10 or more W-2s and or 1099s are required to file those records online through MyPath at mypath.pa.gov, which is our online tax filing system. You also have the option to upload those files in bulk using a CSV format. And then for detailed instructions on how that should look, when you do this, click on View File Specifications. So, the same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so the PA Department of Revenue may administer tax laws effectively. The general rule is that you have to keep records as long as necessary. Many times, this means you must keep records supporting the information on a tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessments is 3 years and begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date the tax is paid. To comply with regulatory requirements, an employer must maintain records for each and every employee and of how much, if any, of the tax that was deducted or collected during the payroll period. The records must provide, excuse me, a breakdown for each of the following. Amounts withheld greater than the required 3.07% pursuant to a written agreement under PA Code Section 113.3b. Amounts deducted pursuant to 61 PA Code Section 113.72 for an undercollection in another withholding period, and any amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so make sure you consult their requirements. In addition, your payroll records must show that you withheld Pennsylvania personal income tax on all taxable compensation at the proper rate and that you remitted the withholdings to Pennsylvania. To show these things, you must have documentation showing amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and amount of the tax you withheld from their pay, dates and amounts of your withholding tax deposits. We advise that you do separate deposits for these transactions so they are easily reconciled with your books, and copies of withholding tax returns you filed and confirmation numbers. A standard payroll journal and an accrual account can be used to record this information and will help serve as the basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is taxable only to their resident state. So, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete a Rev 419 and retain for your records. Again, as a reminder, if you, the employer, accept the Rev 419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold PA tax. 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC miscellaneous forms showing recipient number, last name, rents, royalties, other income, medical health care payments, gross proceeds paid to an attorney, non-employee compensation, box 1, state tax withheld, state income, schedule type, and any corrections if they were made. We stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis for your quarterly employer withholding return. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns as they will help you in filing your Rev 1667 annual reconciliation. It is important to know that periodically, the Department of Revenue conducts desk reviews or audits in which they review the records of thousands of businesses for tax compliance. This is to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or a sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information resources. This other information includes other tax returns and government or industry data applicable to the business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. That is why it is extremely important to ensure you are keeping complete and accurate records at all times. So, withholding tax is a very important tax for business owners to deal with, as it is considered trust fund tax, which means that the employees are trusting the business to withhold and remit their taxes on their behalf. And the Commonwealth is trusting you to make those remittances timely to the Department of Revenue. So let's discuss some resources that are available should you have any questions or concerns following today's presentation. Some of these have been mentioned previously, and this is simply serving as a reminder. All right, first is the Rev 415 Employer Withholding Information Guide. This guide contains all the information that we reviewed here today and more. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds, guidance for payroll providers, as well as phone numbers for areas to contact depending on your question or needs. This is available on the Department of Revenue website at revenue.pa.gov. You just go search for forms and information, forms for businesses, employer withholding forms, or simply type in Rev 415 into the search bar on the homepage. And next is the Rev 580, which is our frequently asked questions sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submission, phone numbers, and the website for the online customer service center, which I will go over soon. Here we have the Rev 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. And now, the Rev 1716 is the schedule put out each year that breaks down filing and payment due dates by filing frequency. So the 2024 schedule and the 2025 schedule are published and available on Revenue's website under tax forms and information, forms and publications, forms for businesses, employer withholding forms, and you can also search it on our website. The 2026 one should be up there as well. And then in addition to payment due dates, this calendar also breaks down filing due dates. So this one is very helpful. And this is the Rev 1611. This form is used to calculate the interest on all taxes due after January 1st, 1982. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st for each year. All right, so we strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click the customer service icon directly from our homepage. Here, you can find thousands of answers to frequently asked questions. These responses are updated regularly to ensure the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature also allows users to submit either a general taxability question or a more pointed question regarding on a specific scenario to a trained representative who specializes in withholding tax. We will review your submission and respond within 72 business hours in a process that's similar to receiving an email. And lest we forget, the Customer Experience Center call center. Here, you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours here are Monday through Friday, 8 a.m. to 5 p.m. And last but not least, and most certainly my favorite, we have created what we call Revenue 411 videos to help with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we encourage you to visit revenue.pa.gov/videos and see what we have out there. And for the sake of time, I'm going to let you know what the answer to this is sooner than later. The name of it, what is the name of the Employer Withholding Information Guide? That is the Rev 415. And it contains all the information that we reviewed here today and more. The Rev 415 is available on the Department of Revenue website at revenue.pa.gov. All right, thank you so much, everyone. That's my presentation.
Okay, thanks, Rachel. I have a poll that I am going to launch real quick. Just one question poll just to get some instant feedback for our experts at the Department of Revenue. I want to thank Rachel, you and your team, and remind everyone that we will be back in January on the 14th for the topic of getting started with MyPath. In February on the 11th, we have Pennsylvania taxes for new businesses. And in March, probably one of our most popular one is sales tax basics on March 11th. So I will encourage you to check them out, get registered. That would be great. And in the meantime, just as a reminder, I will be sending out the webinar recording and I will be sending out the slide presentations. And I think we are good with the questions too. So all questions got answered. So again, this wraps up our tax series for 2025. I appreciate the partnership with the Pennsylvania Department of Revenue. They've been awesome, great resource for us and for all of you. And we appreciate the fact that we will continue the partnership into 2026. If you have any specific questions related to taxes, want some specific training for a specific industry, we encourage you to reach out probably to me. We have done some more specific industry training with the Department of Revenue as we get requests, and we're happy to try to accommodate. And it's always good to know what you're looking for. It helps us to frame up the training that's best for most of you. So with that, again, thank you very much for being with us and look forward to seeing everyone in 2026. Have a nice holiday season and take care. Thanks, everyone. Bye-bye.